Hi, I'm Gail Nicholson, your host of the Corona Spotlight 2020, and we are back for another episode of this amazing phenomenon that just keeps going. And we will continue to be here for as long as the coronavirus pandemic continues and we are learning this new way of life. Today, I want you to help me welcome my guest, who is a senior mortgage broker. And, that may seem like a kind of a conservative and traditional line of work for us to be talking with on the Corona Spotlight. But here's the thing. With the quarantine, with all that's going on with the pandemic, you might be hearing a lot about the word forbearance. Which means basically, you don't have to pay your mortgage payment right this moment. There's some pros to that and there's some cons to that. So I want you to have all of the information that you need to have to make an informed choice on whether you want to indulge in that. And to help us along those lines, please help me welcome Miss Karen, help me with this, Buelterman, is that it? She is a senior mortgage broker.
Buelterman.
Buelterman, thank you. Buelterman. It is my trademark. I butcher people's names. I do apologize.
Buelterman.
Please forgive me. Buelterman. Okay.
Of course.
So, with Arbor Financial Group, thank you so much for being here, whoever you are. And I appreciate you taking the time to be with us today. So, how are you?
I'm doing well. Thank you so much for having me. I just think this is such an important topic that there's a lot of information and misinformation out there. So thanks for holding this.
Absolutely. Absolutely. I want to make sure that everybody that is in our audience and everybody who's watching either now or once this replays has all of the proper information from an objective source to be able to choose whether or not forbearance is the right path for them or whether it's not. So along those lines, let's kind of back up a second and talk about overall, how has the mortgage lending industry changed since this pandemic became such a enormous part of our lives?
That's a good question because it has changed significantly. When it first started, everybody, is like all industries, didn't know how to deal with it. Then what happened is that the lending industry realized there was going to be people that were going to be laid off, that were going to be furloughed, or were going to be going to part-time work. So the paying their mortgage was going to be a part of this. Looking at how we're going to deal with this, how are we going to fund loans, and how are we going to originate loans. So what they did is each individual lender added their own temporary guidelines until we got to the other side. And some of those guidelines, you had to put more down if you wanted to purchase. Your credit score needed to be higher. Your debt to income ratio needed to be lower. So they just really tried to mitigate as much risk as they could. And then on top of that, we just got to a point where they were bringing back some of the mortgage products that were eliminated after the 2008 lending implosion. So we just got those back, and they just said, you know what, we don't have a secondary market for it, so we're not going to be doing any of those types of loans. So they literally just stopped in literally 24 hours.
Wow, that's and that's really fast moving for the banking industry. Wouldn't you say? I mean, to just stop in just 24 hours?
It really was. It was crazy. Seriously, there were loans that were ready to fund, loan documents were signed, some were actually even funded. And these types of lenders said, you know what, we don't have a market for it, so we cannot purchase this loan, and we're not going to do it. So the buyers and the folks that were refinancing just had to stop and just wait until we got to the other side of this.
Wow, that's amazing. So that must have trickled down somewhat to the real estate market as well, correct?
Yes, ma'am. Absolutely. Yeah, the real estate market was really affected. The first thing that we were thinking about are home showings and open houses. Because if you had to stay home, you couldn't be around people. That completely stopped. So they had to reset the rules on. Well, first of all, they did not allow any showings. Everything had to be virtual. And instead of an open house where everybody came into the house, they had Zoom meetings showing the house that way, virtual showings. Mm-hmm. So that really affected the real estate market. And then on top of that, lastly, is that a lot of sellers didn't want strangers coming into their house with the virus. Mm-hmm. So they just said, you know what, we're going to pull out of the market, and or we're going to wait to put our house on the market. And so I think there's going to be a pent-up demand for sellers and buyers.
Yep, I agree. I have a personal experience with that, in that we were renting, and our landlord has been wanting to sell for 3 years, and the timing was just right with the beginning of May, that the end of our lease with them finished up, and we found another place that was actually more beautiful for less cost. So we gave our notice, and oh my gosh, the landlord had a meltdown because of the fear. He was like so over the edge on the coronavirus and distancing and masks, and to the point where the last time we paid our rent payment, he made my husband put it down on the porch and leave the property before he would come out and get it. All right. Now, I don't mean to be judgmental of all of that. I've got other history with this landlord. But, I mean, I got to see firsthand, it's a real fear trying to sell a house in this environment. Long story short, happy ending, he was able to find a private investor that took the house off his hand within 2 weeks. So the market is still there. Right? It's just, you got to get creative with how you're presenting, correct?
Yes. And I have to give it to real estate agents. So if there's a way to be creative, they do it. And they take advantage of everything that's out there. So they really stepped up. They did virtual showings. They did Zoom meetings. They did everything they possibly could in order to market a property, or just set the stage for when that property was going to be listed so they could hit the road running. So there is a demand still. And surprisingly, I was just reading some statistics. The market is still doing okay. They really thought it was going to crash, and it did not.
Interesting. Now, you only work in home mortgages, though, correct? Not commercial?
Exactly. 1 to 4 units. Anything over 4 units would be considered commercial.
Gotcha. Now, I do not necessarily apartment buildings, but I do foresee, and I would have to talk with a commercial mortgage broker about this. The commercial and retail spaces, I think, are going to get much harder hit than the residential spaces because of this. There's so many businesses that were brick and mortar that are changing their business models, that I think we'll see an awful lot of empty buildings out there. But that's the problem for another.
Unfortunately, I have to agree with you.
Yeah. Now, do you think, though, that we're actually going to head into the same problems we had back in 2008 with the housing crisis and the mortgage crisis that we experienced back then? Are we?
Absolutely not. And that's a really good question, because at the very beginning, everybody said, here we go again. And with the 2008 lending implosion or housing crisis, there were a lot of moving parts in that. And everybody knew it was going to take a long time to recover. The lending industry just basically needed to be revamped. Mm-hmm. This time, all we need is just for people to get back to work. Mm-hmm. And once they are called back to work, will they go back to work? So this is just I'm not going to say minor, but there's only one component versus many components and many moving parts to get back into the market again and get us going again.
Excellent. Well, that's hopeful news. How have the rates been? Have they been jumping around? Have they stabilized? Have they? I haven't honestly. I haven't heard any news that the Fed is putting up interest rates or moving them down. What's going on in that arena?
Yeah, that's actually, I do want to talk about the Fed, but rates, oh my gosh. So I was quoting refinance for a rate of 2.99. Once this hit and the lockdown happened, that rate was 5%. The very next, well, it was about 2 days later, it was 5%.
Almost doubled
Because
in two
again,
days.
yes, yes. So what they were doing is they were saying, wait a minute, we don't want any new loans right now, or very few. And if those are the loans that we do want have to fit into this box. So they just put the brakes on, the rates went up just to, what they do is rates are based on risk. So the more risk, the higher the risk, the higher the rates. Mm-hmm. So with that risk of the people not, being furloughed or fired or business shutting down, they had to bake into the rates that risk. So the rates went crazy. And then after that, it looked like a heartbeat. Every single day, we'd get anywhere from 2 to 6 rate changes a day. And sometimes we would get, some lenders would say, oh, we're decreasing rate. And 5 minutes later, we'd get another email from another lender saying, oh, we're increasing rates due to the marketplace. So it was crazy.
Well, doesn't the Federal Reserve have some sort of authority to go, calm down, guys, everybody, this is what we're doing?
Yeah. Yes and no. That's a good way of putting it. Let's talk about the Fed rate, because that's really important. There's a lot of misinformation about that. So when the Fed lowers or increases rates, that does not directly affect mortgages. The only way that it directly affects a mortgage is like a home equity line of credit, but it mainly affects our short-term debt, like credit cards, car loans, stuff like that. Mm-hmm. Now, with that being said, when the Fed increases or decreases rates, how the marketplace reacts to it is how rates are increased or decreased. So the Fed does not directly affect mortgage rates. It's the reaction in the marketplace that will dictate that. So with that being said, the Fed did step in. They were purchasing mortgage-backed securities to help, just like what you said, hey, wait a minute. But what happened is they put in too much, they bought too much and made the supply and the demand off kilter. So that actually increased rates for quite some time. So when they stopped buying that much and reduced it, all these factors, it's crazy. Mm-hmm. So when they reduced it, the rate started stabilizing. But all of these moving parts were happening in the past 2 months, and it's just been mind-boggling, really.
Sounds like it. It really does.
Yeah.
Now, if it was me, right, in a situation like this, and I was not necessarily the big banks, but, like a small mortgage lender, I'd be going, you know what, let's just take 6 months and head to Tahiti for a while. When all this settles out, we'll come back and we'll be good. Are you noticing anybody doing that? Just people kind of like backing off from lending as a whole these days?
Yeah, you're smart. They actually did do that. A lot of lenders did do that. And they said, you know what, we're just going to wait until we get on the other side of this, because when the secondary market wasn't purchasing those loans, they were stuck with those loans or would be stuck with them. Mm-hmm. So they said, we don't want to do that. That's not in our budget or in our game plan or business plan. So they just said, you know what, we're going to step aside for a while.
Gotcha. Now, what about all of the little feeder type of industries? Like my ex-husband was an appraiser, right? And my brother used to have a mobile notary service. All these little mom and pop feeder things that are part of the mortgage process. What are happening to them right now?
Yeah. Well, when the order was sent that we're in a lockdown, there were certain industries that were deemed essential. And so the financial industry was deemed essential, so we could work. Mm-hmm. So with that being said, the appraisers and the mobile notaries that actually went face to face with the public, they had a choice. So each company, each management company for appraisers, and each individual for mobile notaries made the choice. Hey, do I want to go? And if I do go, how do I do this transaction? How do I sign them? So thankfully, a couple of well, actually just one appraisal company that I know of had already been working on this. They had already been getting approved with some of the like Fannie Mae, Freddie Mac, and they'd been working on this for a year. So they got approved by Freddie Mac to do virtual appraisals. So what does that look like, right? Mm-hmm. So the seller or the listing agent would be texted a link. You would open up the link on your phone, and you take your phone through the house, and the appraiser would say, okay, go into this room, show the roof, show the the bathroom, does the toilet work, does the sink work, all that kind of stuff. And then that would all be videoed. And then they would say, okay, thanks a lot, appreciate your help. And then they would give the appraisal within 2 days, and the report would be done, and it's half the cost of what it would normally cost. So it's a good thing that they were working on, but timely for right now. So that's one thing. And
I gotta say, my ex-husband, who was an appraiser, would have eaten that up like candy. That would have been the most amazing thing ever to him. He loved that kind of stuff.
Seriously.
Yeah.
Yeah. They could do more during a day, right? They could do more. You don't have to be you don't have to be with the public. You don't have to drive to each location. So my question was to the appraisal company, is like, well, if the cost is going to be half, are you going to get, saying it as best I can, are you going to get the real seasoned appraisers and the real professionals? And he says, absolutely. Like you said, they're eating it up. They could do more. They are enjoying it, and it's being a success.
Because I can see how that digital file will just fall right into their appraisal forms, all of that. Less time to do it, less time in traffic, less sketchy situations. My ex-husband was a HUD approved appraiser, so he would go from inner city, there's crackheads squatting in the property, to $1 million houses in the same day.
Yes.
So that sounds like an amazing technology. That company is ahead of the curve, and they are going to do very well.
Yeah, I totally agree. And I told him that, and I said, sign me up.
Yeah. So forgive me, I did interrupt you. What else were you going to say about that point?
Oh, well, with mobile notaries, they were very few at the very beginning were actually going out and signing the documents. And once again, technology was taking over. Some lenders had already been working on this, again, timely, but doing e-closings, where everybody would do a Zoom video, the documents would be shown, they would sign them with the notary viewing what they're signing, and then get that notary's stamp and signature. So e-closings are really starting to hit hard. They've started slowly, but now it's really moving forward.
That's amazing. And I'm loving to see this, actually, this movement of everything into a more virtual way of doing business that really is saving time and allowing people to spend more time with their families at home, doing the things that restore them as opposed to drain them all the time. Now, let's talk a little bit about this forbearance, this F word, because when you're in that moment of panic, like, oh my God, how am I going to pay this? And somebody comes along and says, oh, it's okay, you don't have to pay it for a while, right? That sounds very helpful. Okay, sign me up. But then what happens down the road? What happens when in a while shows up? Walk us through this.
Yeah, so surprise happens. because a lot of people, again, there's a lot of information and misinformation out there. That when forbearance was first being allowed, the Federal Housing Association said, okay, so you can ask for forbearance, but what they did not do is say you can ask for forbearance if you are affected by the COVID-19, whether directly or indirectly. So what happened is anybody and everybody started applying for forbearance, and they were getting up to 26,000 a day applying for forbearance.
Wow.
So yeah, it's crazy. So what they thought was that, hey, I don't have to pay my mortgage payments for 3, 6, 12 months. That's great. I can put that money someplace else, or we can save for a vacation. Well, forbearance does not mean forgiveness. There is no free lunch.
Mm-hmm.
You will have to pay that back. Either the missed payments are going to be tacked on the end of the note, or they're going to be added to the original mortgage payment in steps. So it's spread out over several months, but it will need to be paid back. And the real surprise was, and again, everything changes. This whole COVID for all businesses is it's a moving target. So at first they came and said, okay, if you're going to be in forbearance and if you miss one payment, you cannot buy or refinance for 12 months. And that just kind of set everybody back. They're thinking, oh my gosh, isn't that a harsh way of dealing with this? Mm-hmm. So they actually agreed, and they said, okay, this is what we're going to do. And depending on the lender, it's tweaked just a little bit. But if you make up your payment for missed payments, if you make those up and make on the forbearance agreement 3 to 4 payments, you can refinance, or you could sell the property and buy again. So they did back off on that 12 months that you cannot purchase or refinance. But still, the big deal is forbearance does not mean forgiveness.
Right, right. And that begs the question, what happens to the interest during that period of time? Because now, forgive me, but when I was doing when I had student loan forbearance, they still kept charging me. Is it the same with mortgages?
Absolutely. Absolutely. So the new rates that are coming out every day, they actually were increasing on top of the increase because the servicers. So I'm making my mortgage payment to ABC Mortgage. All of a sudden, I don't make my mortgage payment. They still have to make those payments. The servicers still have to make those payments. So they were making payments. And then next thing you know, the secondary market were doing margin calls on these servicers, and they were in trouble. So the rates were baked into the risk. So the rates were higher as well, just due to those several factors. But that certainly didn't help. So the Fed the FHFA stepped in and said, okay, if you make more than 4 payments, then we'll help you, but you still have to make 4 payments on the mortgagee's behalf. So they helped them, but it's still not 100%. They still have to make those payments.
Wow, that's kind of scary. It
is.
Now, what do you expect the rates are going to do over the next few months? It doesn't seem very stable. That's a
gazillion-dollar question. That's a gazillion-dollar question. What the experts that I've been listening to, that they're saying, before this happened, they said the rates are going to be in the 2s, just because of what the economy was doing and what they foresaw, and all the signs were pointing to rates in the 2s. So then this hit, the rates went up and stayed up for several weeks, or did the heartbeat, and they're starting to stabilize. Products are being brought back. The risk is getting a little bit less because the businesses are starting to open up. Again, that uncertainty of who's going to come back and who's actually going to be opening is there. But so rates are stabilizing. I still do believe that they will be in the 2s. One lender that works with brokers only saw what was happening, and they said, you know what, we need to do something. So what they did is they created a whole separate lending strategy to bring the rates anywhere from 2.5 to 2.99. And they're slammed right now because the rates are so good. But I do believe that will be the norm rather than the exception after we're past this.
Excellent, excellent. So now, what are you doing to get the word out there in general? I know that at least up until this point, you've been part of a team that goes out into businesses and helps offer a value added on benefits to businesses by informing their employees of what's the best moves in the mortgage industries and so forth. What is that
Yeah.
going to look for you going forward?
No, that's a good question. Thanks for bringing that up. So, what we do is we go into businesses as part of their benefits package, and we teach the employees or educate the employees on the mortgage process and the buying process. So they're more educated when they go into the situation, and they know rather than gathering the misinformation and hearing the fake news. But we help them understand and help guide them through that process. And that's we're putting this together as we speak. So once this ends and that businesses are opening up and they allow people to come into the offices, we're going to be holding these again. But we're hoping that will be hopefully by the end of the year. But we would love to be able to go into businesses and and educate the employees on what's this process all about. There's so much. I find when I talk to people, like one example is I talked to a first time home buyer and they said, "There's no way I can buy." And I'm like, "Why?" "I don't have 20% down." And I'm like, "Gosh darn it, that is such a misnomer because you don't need you can go into a house as little as 3%, and there's down payment assistance programs to help too." And once I educate them and open up that door of what's available, then they relax a little bit and aren't so tense on purchasing a home and becoming a homeowner.
Mm-hmm. And I gotta echo that because when I bought my first home, Michigan had a first time home buyers program that you went through a class. You learned the different options, and I was able to buy my first home. I paid $325 out of pocket and moved in.
And that is an excellent story.
So,
It's
yeah,
true.
yeah, absolutely, 100% true. And so, yeah, there's definitely a lot to be said for educating the uneducated potential buyer, especially the ones that don't even think that it's a possibility for them. So they
It's
wouldn't
so sad.
necessarily been seeking out individually. Now, how can any business who wants to bring you in to talk to their employees reach out to you to set up that appointment?
Hmm. They can email me at karenb@arborfg.com. My phone number is 619-972-5507. And we could set up an appointment. We do a little presentation showing what's going to be presented to their employees. And we set up the time for the seminar presentation and to make that happen to help educate their employees.
Excellent. Excellent. I want to thank you very, very much for being here today and being one of the people that is making things more clear during this chaotic and confusing times. Like you said, things are moving pretty darn fast in a heartbeat model, and we definitely appreciate your laser light shining where it needs to be shining, so that people are equipped to make educated decisions. Thank you so much for doing what you do.
Thanks, Gail. I appreciate you. Thanks for allowing me to come on.
Absolutely. Now, do you have any final thoughts before we close this down for the day and send our Facebook audience on its way?
um, just there's a lot of information to be had. Each person is individual and they have individual needs, and they should be taken care of as such. And communication, education, guidance, that's what customers need.
Beautiful. Thank you so much for being here, Karen. I'll take care, and bye, Facebook. Have a wonderful day. See ya.
Thank you so much.
When you open yourself up to actual energy work, makes that recovery progress so much faster. That recovery is possible. You do not have to live as a victim until your last days. You have unbelievable strength, and I know that because you're still here. Do you want to create something completely unrecognizable with your life? I can show you how.